Okay, go ahead.
All right. All right, guys. So what we're gonna do is talk about the indicator 4D, the one over here. For now, it's locked just for me and Evans, but I'll open it so everybody can see it. I just need to do a few more things to it, like 2, 3 things, change a bit of stuff. But anyways, the indicator, let me just delete this. The way the indicator works is pretty simple. This is basically 3 RSIs, and there's another RSI here with the white line, you can see it, but 3 RSIs, and the volume is the volume of the price action, not the volume of RSI. So the way it works is actually telling us the real, let me just get my pen for a second. The way it works is actually telling us the volume divergence, not the RSI divergence, the true volume. The way that the way that we have volume here is going to give us the volume of price action, not the RSI. You can see the price is creating a volume divergence here, but RSI is not really showing you that. Kinda is, kinda not. I'll show you a few examples more. RSI divergence, volume divergence here, but RSI divergence is not really showing you that, like you can see. So the volume divergence is more precise the way I set it off. It's different settings than the usual RSI. Like I said, in the morning Zoom, the usual RSI has is always set on 14. This is a bit different. All 3 have different kind of settings. Just a second, somebody's in the waiting room. Boom, boom, boom. Close, share. Yeah. So the usual RSI is 14, and it's everybody knows about RSI divergence. It's common thing. This one is open, one is closed. One works for on daily opens, one works for candle closes, and another one is just set for yesterday's high and yesterday's low. So they are kind of giving us the image of that with additional volume that is actually the true volume of the price. Yeah. So you can see the volume divergence here and the volume, the price action divergence here and the volume divergence here. It's different than the RSI, like I said. It's more precise and it's easier, much easier to spot than this one, of course. You can see that. There is also another example here, and you can see the RSI is going to bullish divergence like this, and this one, the volume one, is showing us the opposite. So you can see that price is doing this, and the volume is doing opposite. Okay. We can also see here, as I said, the price doing opposite of the actual volume. There is another entry except divergence. There is another entry that I like to consider, and that's a squeeze. When the momentum line and the RSI lines are separating each other, okay? So when price is rejecting the momentum line, that means that it's gonna be a reversal in that specific area. This would be that area here. So price is rejecting it. That means that you can look for reversals. It's called squeeze because those 2 lines are squeezing together and then separating. Another entry opportunity would be in these areas around here, and around here, even around this area here. These are all good opportunities to look for entry. I'll mark it like this so you can see it much easier. So a beautiful entry, a beautiful buy entry would be somewhere around these areas. Somebody is in the Zoom waiting room. Just a second again. Admit, close, share. Can you see my screen? Yeah. Okay. All right. You can see that squeeze has its own magical powers here and its own magical powers here. Every time you see price squeezing with the momentum line and RSI, the price will bounce off. Yeah. So the squeeze with divergence in this case here, it's a quite powerful entry confirmation. If I've seen this, and then I've seen this few moments after, even though this is 4 hours, let's say 3 days after, this is a confirmation for entry. You can, of course, use it for H1. You can use it for M15, which works quite good actually on M15. M5, M1 is kind of tricky. As we all know, indicators will be lagging. So indicators will be lagging. I don't know what's going to happen until it actually happens. But on H1 and M15, H4, daily, whatever the higher time frame, the better. You got in plenty of time to set your entries. Okay, so there is more than enough for this divergence, and then 3 days afterwards, you can see squeeze happening here. It doesn't matter if you entered after the squeeze, you will still be all right, because this should be protected. Okay, there is another option that we can look for in this indicator, and that's called crossover. So crossovers in this case here, here, here are actually the future POIs. Let me explain what I mean. So the crossover here, when the price crossed over the momentum line, we can see that this would be a good future POI. So somewhere inside of this area, I will look for my entry. And let's say I found my entry here. I mean, I did, but let's say I've seen a crossover and all that. I found my entry here. This would be my entry based on, of course, QM, but also based on 4D crossover right here. You can see, obviously, you got high and low, a higher high, a lower low. The QM hasn't been finished. Price never returned to finish the other leg. That means that this is most likely to be valid. Same thing that we have here, of course. We have a low, a high, a lower low, a higher high. That means that this is most likely to be respected. If I was to trade this, I would probably ride it all the way to the other QM, following QM to QM. Yeah. Eventually, of course, if you took this QM, if you took an entry here, of course, there is no point to ride it all the way to here, because this is now already done. This is now just liquidity, so you can definitely ride it above it. Okay, or maybe next QM somewhere over there. That's not the point here. I'm trying to tell you that crossovers also have their magical powers. Like you can see, they are representing a POI in the future. So POI in the future, not always. This crossover somewhere around this area. I don't know if you would take this. It's better personally to find a QM. So don't take silly order block entries. Find our entries around here and then take this, but the crossover will tell you or indicate you that there is a POI somewhere inside of this demand area. Then another crossover here. This one was again good one. You have a crossover here. Let's say we got low, a high, a low, a higher high, and then you can find your entry here. You wouldn't be tagged in, but shortly after that, you have a squeeze, and then you have a squeeze. So even if I wasn't tagged in, almost tagged in, I missed it. I do see a squeeze happening after few days on H4. I can still find my entry somewhere around these areas. Okay, now I understand the crossover is gonna be missed by few pips. I can still look for my entry because I seen a squeeze few days afterwards. Okay, for me the perfect entry approach on 4D would be divergence plus this looks like a cross plus squeeze, sorry. Okay, sorry for my handwriting, but divergence plus squeeze would be a perfect entry is if everything aligns with the logic we talked about over this boot camp. Okay, so don't just use the indicator for itself. It is quite good. I tried to trade it. I mean, I traded just based on indicator to see how it works, and it was good profit, especially squeeze. It does give you good profit, but of course we need to implement the logic of charts, not just the indicator. Yeah. So entry one for me would be divergence plus squeeze, like here. Beautiful confirmation. I can take myself from this area over here. We also have a crossover here. So this would be another divergence plus crossover here, another good entry approach. And you also have crossovers plus squeeze, another beautiful entry approach. There is one more thing, and that is supply and demand zones that are marked on the indicator here. For the indicator, you can see I marked 20 and 10 levels, 90 and 80 levels here that are representing supply and demand zones. Usual RSI levels are 70, 50, and 30, I believe. Yeah, 70, 50, and 30. Also, I forgot to mention this one has 50. Who's in the room? Just a second. People keep walking in. Also, this has 50 levels here. I'll explain how it works. 50 levels, I don't know how many people know, they act as support and resistance. They do have their own false breakouts on the indicator, return, pullbacks, and stuff like that, but we don't need to talk about that now. All I wanted to say is that we have a supply and demand zone marked on the indicator, so it's easier to understand that price is in the supply or demand zone. Of course, we do need to see when it comes to supply and demand zones on the indicator, what I like personally to see and what works definitely the best is not entering when price is inside of a demand zone, even though this would be a good entry, but we need to see price leaving the demand zone, tapping into the line, demand line, and then bouncing off. So entry for me personally wouldn't be here, it would be mostly here. So I would have divergence plus the demand line tapping in. So something like this, even though this one doesn't have demand, price tapping into demand and then price going into demand zone and then tapping in. But once the price taps into it, that's a good opportunity to buy. Of course, if you have everything else aligning with. So something like this, price is tapping into our supply zone, price is leaving the supply zone, and then price is tapping into. This would definitely for me be a good entry approach to take my trade. You see I marked QM approach, QM entry here. It did get missed by few pips, but after that we do have a squeeze forming, and squeeze is going to tell me that I can still take my trade if I find different approach today, this week or this whatever day after I missed this. Okay, I'm still confident the price is going to go down as I seen squeeze. For me, squeeze is representing a continuation trade. The divergence, the volume divergence in this case is of course a reversal. Everybody knows that divergence is representing reversals. After you see divergence, you will see a reversal. But the squeeze is the one that is confirming the continuation of that. Let me just get someone in again. Screen start. All right. So I hope you understand that. Let me go on a different pair so you can see it better. I marked it more in more details like this. Come on, load. Let me just delete this. Come on, it doesn't want to get deleted. Just a second, guys. All right, you can see the indicator again showing us volume divergence opposite of RSI. You can also see a beautiful example of price tapping into demand zone and price tapping into demand zone, even though I would personally like to see this getting into demand zone on above level 80, tapping, going into demand zone and then eventually tapping into, but this is still a good sign of entry. Divergence plus a squeeze here where this momentum line has been rejected is confirming my continuation, and I can find my setups inside of this area here. There's also a crossover. If you want to zoom on the indicator, you will see a crossover happening somewhere around this area. Okay, so by the way, don't take every crossover. There has to be a logic for the crossover. I mean, this can kind of work out, maybe it wouldn't depending on your stop loss, but don't take every crossover as your entry. There has to be a crossover plus squeeze as a powerful confirmation. Crossover on its own is just representing a possible POI, nothing else. So crossover here is somewhere around here is representing a possible POI. So somewhere around this area maybe, or somewhere around this area, you would look for, I don't know, here, or this is the better example. You would look for your entry based on the crossover, but of course you need to see squeeze forming here. Once I seen squeeze forming here previously to crossover, I would look for my entry. Of course, few days after I see another squeeze, this is confirming my continuation trade to the upside. Another thing I forgot to, let me just show you another example of squeeze real fast. Squeeze here, you look for your setup here, squeeze here. This would be a beautiful squeeze that most definitely would give you good profits if you've seen it on time. Once price is squeezing on H4, you will see you literally have H4 candle to close to place your trades. 4 hour time, maybe 2 hours time, maybe 1 hour time. It's much better than 1 minute time to place your trades. So this indicator will help you a lot, and you got plenty of time on H1, H4 daily and so on. Okay, but of course you need to see things forming up. You need to see two confirmations. For me personally, you need to see divergence plus squeeze. You need to see crossover plus squeeze. You can see demand level tapping in. You can see demand level tapping in plus squeeze, even though I prefer, personally, I do prefer divergence plus squeeze as the most powerful one. Squeeze on its own, like I said before in the morning, can definitely stand on its own, but it would be a risky confirmation. But definitely 8 out of 10 times, I got it in my journal, squeeze works on its own. Okay, the only thing
Hey,
is,
Ivan, I got a question really quick.
yeah, sure.
So with this, the 4D indicator, Evan was talking about, so when he told us to get like a couple different indicators or whatever to get on our trading view, he put on a volume indicator. And do you, I mean, I don't know if you guys like have figured that one out or whatever, but is that one going to be over that volume indicator that he was talking about, or?
You mean, is he going to talk about VSA, volume, or fixed range?
Yeah, so like, is that 4D indicator that's on your chart, is that going to be, are we going to use that one instead of the volume?
He's going to talk about POC and VSA if you want. POC is quite good, fixed range is quite good, but for me personally, I see more stuff going on here than over there. Me personally, you can add this.
I use volume just to validate the price action, so it's you can use them in conjunction, but I'm just using it as to validate a move, to see a fake move, because volume tells you the real move, if it's a real strong bullish candle or not.
Yeah. Why I use 4D and I find it for me that it's helpful is because it shows me the reversal of price action, and it's also showing me the rejection of momentum, telling me this would be a strong continuation. When I'm thinking, is it gonna, I don't know, when I'm thinking, is this gonna give me a reversal to the upside? Of course, if I see squeeze, this is no go to me. I'm not gonna take this shit.
Gotcha. Okay,
because
thank you.
I've seen this. It helps me a lot to understand what price is actually doing, and it's also giving me the true volume, not the RSI price divergence, but the volume divergence, which you cannot really see. And it's also showing me the supply and demand zone. So it's actually showing you a lot of stuff on one indicator. You got roughly around 4D stuff in one indicator. So four different things on one indicator, telling you continuations, telling you reverses. You got entry approaches with divergence plus squeeze, crossover plus squeeze, loads of different options. You don't need to use all. If you focus on divergence, volume divergence, and squeeze as your continuation trades here, with the things we already taught you, with timings, with everything you already know, this would be a good entry. This is definitely a stop loss entry. No stop loss entry, sorry. Yeah. Like I said, this works quite often.
Gotcha, thank you.
So there's loads of options you can trade just based off this indicator. For me, it's quite good. On M5, intraday M5, M1, kind of risky. Like, you know, every indicator is lagging. There is no indicator that's not lagging. But on H4, there's plenty of time to enter the trade, or H1, plenty of time to set everything up, to think about the logic on the charts and see the indicator. Just browse your eyes on the indicator, see, oh, okay, I got squeeze over there. Oh, I got divergence there. I'm going to wait for squeeze and then I'm going to enter the trade. Or I'm just going to take a risky one from volume divergence. But it should be inside. It should always take it once it's tapping into 80 line or 20 line. Don't take this for this. I wanted to tap into it. All right. I forgot to mention something, but it'll come back to me. Have you there? Haven't you there? Where did he go?
I'm right here.
All right. I'll make you host, but you can guys see squeeze, 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 squeeze. it's literally everywhere. Crossover plus squeeze here, a good entry. Kind of squeezing here now, really a good entry. Price inside of a demand zone. You can look for your entry shortly afterwards. There should be a divergence, but if it's not, then I wouldn't be looking into it. But at least I'm thinking price might actually be in demand zone here. So it might actually give me some kind of reversal. Price tapping into the demand line, this should give me a reversal. Okay, if I see a squeeze happening here, I can look for my buys, buys, buys. Okay. Oh, the thing I forgot to mention is, I don't know, it's people call it differently these days. Some people say hostile divergence or anti-divergence. The way it works is once you see a divergence on, let's say, this trade, even though this isn't really divergence, let me find your divergence just a second. Okay, let's say here. Once I seen divergence forming here, and then I seen price giving me divergence somewhere in this area over here like this, that means that I should probably cancel my trade. If you know what I mean. If I see divergence here and then I see divergence over there and I decided to enter here, that means I will probably cancel my trade because I seen hostile divergence. Okay, that's the only thing I forgot to mention in the morning, but it's something to indicate that a price that this is where my TP should be, or at least putting entry on break even, at least that, just to be sure that it doesn't kick me out. All right. If you have any questions about the indicator, let me know. It should be ready about two days. Yeah, can I repeat? So basically, when you see a divergence on one side, and then you see a divergence on the opposite side, you can ping pong it, but you should probably close the first trade because you see a hostile divergence on the opposite side. There is no logic in two divergences happening at the same time. That means something is about to go down. So it's better to close it. Or you can ping pong it. You can hedge it if you want. Why not? For me personally, I just close the trade and that's it. And then I wait for a squeeze happening. And then I will reconsider about entering the trade. But squeeze, if I see two divergences forming, the first one that has squeeze is gonna give me the true continuation. All right. So it's four different things on one indicator. You got divergence, you got squeeze, you got crossover, and you got demand or supply zone tapping in. Okay. If everything aligns at the same time, you can just over leverage that shit. Well, let me make a post now. And the thing I wanted to, I made you host. The thing I wanted to say is everything has to, the indicator, 4D indicator is just a confirmation. We're not going to trade based on it. We need to see everything that we taught about before, that we've been teaching before. We cannot just trade based on indicator. It would be silly. Maybe you will be successful in or not, I don't know, but you need to have the QMs and timings and everything, different types, 1, 2, different types. And then when you're thinking, should you take a trade, just look at the indicator and it's gonna confirm. It will indicate to you that you should take the entry. Okay. Me personally, I don't enter if I don't see indicator showing me that, but you can enter without it. Indicator is just an indicator. All right.
Cool.
If you have questions, type it in the chat.
So if I'm understanding this correct, the indicator is more of a confirmation tool for the directional bias, but we take our entries based on the QM method, that like after the structure break, and then return to QM level or origin. Is that right?
Yes, yes,
On
yes.
the lower time
Indicator
frame.
is just indicator. It's not something you're gonna rely.
Yeah, I was
on.
wondering because since it's going to be a confirmation from the 4 hour, I was wondering the stop loss would be wider, but now I get it. Since we are going to do the entry on the lower time frame, we can still cut down the stop loss. Okay.
Yes, yes. There is also an option if you want to combine it, but when I see something on H4, I stay on H4, or when I see something on H1, I stay on H1. But you can definitely combine it, as I've seen, it works also quite good, is if I see a divergence on H4, I go on a lower time frame to refine my stop loss, and then I see squeeze on H1. So H4 divergence plus H1 squeeze is quite good. It works quite good. You can definitely combine timeframes with different indicator approaches.
Okay.
I don't want to confuse.
Thank you.
Yeah, I don't want to confuse people too much. But once you get the indicator, backtest it on your own. Do your own study on indicator. You need to train your eyes for indicator.
Sure.
All right. So in today's lesson, we're just going to look at entry. And depending on the type of trader you are, you could have swings or scalps or intraday trades. Basically, I look for a POI that's already confirmed, meaning an engulfing. So for example, see this up move engulfed, and then it's the origin of the structure break here on the H4, right? So this would be my POI right here. Okay, so I'd be waiting for an engulfment to happen. It can happen on any time frame. So if I'm using H4, I'm probably going to enter around the H1 to M15 time frame. So what I'm looking for inside this area is I'm just looking for my QM. Okay. That's what I'm looking for inside this. Let's go to M15. Okay, so you see how our QM happened here? So there's your entry here, or if you wanted a smaller stop, here, okay. All you're looking for is a QM inside this area, inside your engulfment, okay? That's it. Now this obviously would be like some type of 5-minute entry from here, and you'd have a power move, something like that. Possibly lower time frame than that. I don't think TradingView is going to let me go back that far though. Yeah. So in the last class, I was talking about using our highest form of supply. So we can see supply came from up here, right? This is the highest point. So this is your safe SL. You have a safe SL here, and you know, you get your move, because this right here caused this low to break. And as we return, we hit it here, because I see a lot of traders, they'll use, I mean, there's still supply in this wick here. Okay, that's why it's still a safe bet to put your stop loss above this. Okay, and there could be like a 1 minute entry inside here. I haven't gone down to a 1 minute time frame, But if you're gonna be that greedy, you know what I mean? This is like 2.9 more pips. So this is just safer. Okay, you wanna have the entry, plus you wanna have a safe stop. So I would be putting my stop above this. Okay, and this moves pretty aggressively afterwards. Okay, and there's multiple entries here. Like, there's a QM here. Kind of, not really. On a lower time frame, maybe. This wick possibly had broken this. We'd have to check a lower time frame, like on a 1 minute, because you have your high, low, higher, high, lower, low. This is where your QM would have came from. You know, so your entry would be on this left shoulder like that. And if you like really tried to sniper it, and there was some sort of POI in this wick up here, you'd have, you know, perfect entry right there, like very low drawdown. Okay. Oops. So it's very simple. You identify an engulfment with your higher time frame, making sure that structure is breaking from that engulfment, not just because it's an engulfment, making sure that that engulfment is a fresh area. It needs to be a fresh, unmitigated engulfment or incomplete, right? Like we need the price action to be efficient. So when we had that over here, okay, this was right here. Remember how I said, if the wick is taken, which the wick was tapped into right here, then we can use the body and that becomes fresh. So from this body of this into here, we would have had a trade. Okay. Let's look at more examples. And again, the QM, right? Like you guys should be training your eyes to see this so that you can see that pattern and that setup over and over and over again. But you don't want to be doing just QM entries all day unless you're in certain market environments, right? We need to be in a consolidation, and it needs to be like a minimum H1 consolidation, trading sideways and then catching the QMs to QMs. Okay. Let's look at another pair. If we're not doing that, like if we're not doing QMs, right, we stick to, and this was an example that I went over last night. Make sure we're in the right area. Oh, wait. Is that correct? Go to. Okay. I think it was around here. Let's go from here. Every minute. Okay, so for example, this was a trade that I actually took. This is on my my IG. As we can see, we have a strong high and created a new low, right? Strong high, new low. We have high, low, higher high, lower low. Okay, so you have a QM here. Okay, and you can see price melts right after. You have a QM here. This probably wouldn't have been something you've taken because we would have been actually waiting for this low to close below this low. So I wouldn't have taken this. But nonetheless, it actually ended up working out on that one. Anyways, so when we look at this QM, right, and we're waiting for price to get here, we also have POI confluence up here. Okay, we have our timing window here. Oops. Okay, this is New York time. Right there. We have shoot, I didn't save that setting. Hold on. Okay, so we have our standard deviation of 2 lining up with this POI here. Okay, and you can see it taps it right to the pip. Okay, we have see this? This was that aggressive move. We have a break of structure. Okay, we have premium level above 50 to take a sell into, and we're catching this head and shoulders here, right? Or this QM. QM is basically a head and shoulders, okay? So right here, drag that across, price breaks down, re-enters, and we get a massive movement, okay? And this is like probably the best trade that you can possibly have gotten. Okay. This when everything lines up like that, this is where you can go very heavy and hold. Okay, because there's times where you can go heavy, but you're not going to be able to go and hold because you're not at the right price level. And there's times that you're going to be able to hold, but it might be more of a riskier entry. Okay, but you want if you want that like really high confidence, you need everything to line up. Let's look at I don't know, some random pair like AUD USD. Remove these drawings. So let's see if we find some type of engulfing pattern here. Don't really like this, doesn't look clean. I don't really trade this pair, like very rarely do I trade AUD USD. Let's look at a 1 hour time frame and then try to find a 5-minute entry. I mean, this wouldn't be something I would take because we would need to break this low. Okay. Here, this would be something. If you see how this works, this high, low, higher high, and then price breaks down, you'd be waiting for this leg to get completed. Because on this head and shoulders, even though there's a right shoulder, right? Even though we have a right shoulder, we never got our confirmation of engulfment. Like we didn't break it until now. Okay, so this is still a valid head and shoulders once price comes back and taps here. Okay, but since we didn't get that low taken first, right? So we would want to see this high create a new low, then return to create that right shoulder. So when you're like observing your charts, like make sure that you're getting your confirmation. You don't want to just take this weird looking head and shoulders pattern like this. It's not something that you should be looking for. It should be clear where you can see the new low being made and then price returning to it. Okay. Not really feeling this pair. Let's look at a different pair that's more choppy for this. Here. Okay, so here we get our engulfment, right? This low, right? This low created a low, a high, and then a lower low. So you have a QM here, which you can see price trades to and then drops. You have an OB here. Okay. And this is a pretty wide zone. So you'd probably try to look for refinements on this because this is just too wide. How many pips is this? Yeah, this is like 50, 47 pips. So in here, you see we have a high, a low, high, lower, low. Okay, this is the QM. Price comes back to it here. And then drops. And depending on your SL, if you had it a few ticks above, you would have caught this and drop. Now this obviously can be refined, this level, right? We have our QM level here. This wouldn't be it. This is the exact thing I was talking about. High, low, higher, high, and then the low. This isn't your right shoulder, okay? Does that make sense? This isn't your right shoulder because you never got the confirmation. But we leave it over here, right? Now that left shoulder is complete, and now we get the drop. It's very simple. The thing is, you need to look for your setup on whatever time frame. If you're using an H1, then stick to your H1. If you're using M15, then stick to your M15. You just need to look for your setup. Okay, like whatever your setup is, right? You have your setup. Then you have your timings. Okay, like you have timings with the setup. Then you have your higher time frame engulfment, right? The higher time frame is confirming that move for you. So if this on an H4 or daily is engulfing as well, then you have your confirmation to take this trade. Okay. And what did this come in? This high came in at 86.59 and this high came at 86.59. So yeah, you wouldn't have gotten stopped out of this and you would have caught that very aggressive move. Okay. So you have your timing, you have your structure, you have your setup, you have your confirmation. Everything is telling you that this is a high probability sell within the zone of this H4 engulfment, right? Not only that, but your QM level here, okay? Or from here on the daily, obviously. So everything's happening inside. Like once price gets into your area, then you can look. Okay. But what I'm doing, like when I'm trying to take a trade, is just I'm waiting for that engulfment. So I'm waiting for, if I'm using H4, this already moved aggressively, right? So I'm looking at H4 and looking at, okay, cool, this candle engulfed. What's happening inside this is what I'm interested in. And then I'll wait until price reaches back into it, and then I'll look for my setup, right? So first I'm looking for my confirmation of a setup, right? This engulfment caused a break, okay? This low caused a new high, and we break. Would I take the wick? I mean, if the wick lines up, everything's on QM, so I don't, like if this is lining up, then I'm layering in, you know what I mean? I'll layer orders in here. This wick, that wick has no significance to me. Like it just, I don't see a QM up here. So like, you know, if there's a QM up here, then maybe I'll take that. You know, like where's your QM up here? There's none. I don't have a level. Lower time frame. I mean, in a lower time frame, if this is M5 and there's something in there, or M1 maybe, but like where's your entry? You don't even get it, right? So that's how I know that I don't need to care about this imbalance. Like there's nothing lining up with it. let's see, AV CAD. Oh, there was an example we used last night, which is here. If we look on H4, okay, we see we have an engulfment right here. This candle's engulfed, broke the structure. Okay, we have space, we have imbalance, we have this, right? I'm waiting for price after this happens, after we break the low, come back in. Go to M15. What do you see? Can anybody draw it that wasn't here last night? Anybody? Yep, good job. Okay, so you have your confirmation there. This was the engulfment, high, low, higher, high. This is the low that created this high, right? This is that wick. Price drops. Okay, now not only that, timing. Okay. Confluence, confluence, confluence. Is there any questions? How do I draw what exactly? You just click annotate. I don't. For me, it's at the top of the screen. I don't know if anybody else knows where it is. Yeah.
You should click in the pen looking. Yeah, or go in options and find anything.
H4. Let's look for another. Let's see if we. Okay, and let's see. Yeah, there's a QM here. There's some smaller time frame QM here. I could just see, you know, high, low, higher, high, lower, low. You get price to return here and then sell. So when your eyes are adjusted to it, you can like see these things happening. Like we can observe this right here. So we have an engulfment right here. Okay, this one almost takes you out, but it's still the setup. Let's look at the 15-minute chart. And you can see, can you guys draw it? Yep. Exactly. Right. Exactly. See, this is why, like with this specific strategy, if I'm just using QMs and I'm trying to compound an account, like I don't need to use an SL. You know what I mean? I'm just layering in small positions in here until I get a big position, and then price moves aggressively in my direction based off higher time frame. Okay, so we have that confluence with POI. Oops. Okay. And you get a move. Okay. And why did price stop here? It's because looks like we have a, let's look on a higher time frame. This low take this? Not really. I think on some lower level, on some smaller time frame, we have like resistance. We have that continuation pattern down to here. Okay, but I think this gets ran out based on higher time frame. Yeah, eventually that'll get ran out. Okay, but you get these moves. Let's continue this. Okay, so price wicks you out here, comes back down, wicks this out, right? Because this would have been a QM, so this would have been a failed one, right? You would have looked at this as a QM, depending on if you used the stop loss or not. This would have taken you out of the market because this is your high, low, higher, high, lower, low, and you would have expected a sell from here. But I think we're completing something on this time frame over here, something over here to the left. So I'm just like, I like to pay attention to these engulfments and then look at what's happening inside these. Move this stuff. Not seeing anything too clear on this. And you have your high, your low, your high, your lower low here. So possibly something in here. Oops. With your POI confluence. Let's just go higher time frame. Yeah, price never reached it. Price never reached that area. There's an engulfment here, right? So we'd be looking inside this now. This is new, fresh supply that's been created from here to here. But I don't think price is going to reach there because this is where we got that last entry right there. Yeah. So this is still in the pipeline, right? Like we could still take trades from these levels. But this is a clear example with the timings and everything to get in a trade. Okay. Is there any questions? Just waiting to see what happens here.
That would be a good one, yeah.
Somebody posted GJ last night, I think.
GJ on H4 or H1?
Yeah, I think somebody posted, was it oh no, it was GU. They were looking at H1 actually. I think they were looking at H1. Who was it? I think it was Nahima. Is she in here? No, she's not in here. Anyway, she posted it in the group last night. It looked great. Other than the fact that the low didn't engulf. Let me see. What did she, I think she was on H4 maybe. I'm pretty sure it was GU. I don't know why I can't see it. Let me check the chat. Where's our chat at? Oh, there it is.
This wouldn't be valid.
Oh no, it was UJ. That's what it was. I was like, I don't see it on here. It was UJ on the H1 right here. Tap 1, tap 2, and then we're looking for this level, this QM level here, possibly something like this, maybe. around this area where we get that
Yeah.
third tap and then sell. Because we have high, low, higher, high, lower, low. This is probably some type of inducement to come up here, make a left shoulder, and then the head, break, and then tap, break. So we can have like something like that happen, or we could just take it off the head up here, like that. Sorry, more like this to line up with this area. Okay, so if you ever like are trying to catch the head of the head and shoulder or the QM, it's because it's going to line up with the trend line here. So this is a continuation. And you can take a riskier entry with the fourth tap, which is most likely not going to play out, but you could have that completed right shoulder entry. Okay. If that doesn't happen, and it doesn't look like it's going to happen because we're already kind of like outside this trend line, right? What I'd be looking for is possible this strong resistance. So we have support, support, turn resistance, right? So this is the easy way to look at it is support, support. And then you have double support broken, and then now it's resistance. Okay, so this should be resistance right here. Because where did our support come from? From here, broke, retest, come down, and then we can enter like that. So many probabilities in this scenario here, but I do like this head and shoulders to be complete. Still need that left shoulder. So I'd probably be looking for something like that. It would have been nice if this, what had happened is if this right here tapped up here like this. So this is a setup that you'll see a lot play out. Remove all this. So a setup that you'll see play a lot is, okay, so we have that head and shoulders, right? And then this comes up to complete that right shoulder and then drop. Let me remove this. So let's say this completes this right shoulder, this left shoulder, right shoulder, right? And it came up from here. If this happened, and it went up and then came down, right? Then you'd have this entry as well, like this. Does that make sense? So here we're getting that right shoulder completed, which this is your continuation 2. Remember, the continuation 2 is when you have strong resistance, price comes into it and then drops, but we still use the support as our POI instead of a basing candle in here, which it looks like there was a basing candle in here that price is reacting to. So you would have that, and then this would come be and be your next entry. So you'd have an entry here and then here. Okay. So it would look something like this. So if we have our QM, okay, and let's say we have our continuation, okay, so let me draw this so it's cleaner. Okay, oops. Like that, right? So this is our continuation coming from, let me make this a little bit higher. Okay, so you'd have your first shoulder and then that one being complete, right? And then we'd have something, I'll just put it higher just to make it easier on my life. Then you'd have your third tap here as well. Just put it over here. Okay, so you'd have one, boom, this would be your entry right here. You could also enter from here, but this would be your third tap entry. Okay, and then let's say we wanted to continue this trend line. We would see that price broke from here. Hold on, let me move this chart. For some reason, I can't move it. There we go. Sorry, not this. Let's say price did like this low right here, and we were looking for that continuation. Okay, and then price moves up, right, past this right here, right? But then we would use this level here as our next entry. Okay, like that. Does it make sense? So we have our trend line. So you have your boom, your entry there, entry here. And this is literally just that continuation too, where we use this as the POI. Okay, now let's say that didn't happen, and then we just had, you know, our basing candle in here, and we can look for other types of plays afterwards. So you'd have that, and then you'd have your strong, let's say, support here, price bouncing around it. Like that, creating a new trend line, right? And then price would just bounce off this, like that. Oops. Okay, so here, right, we have the entry based off a basing candle in here. Okay, so you'd have a basing candle in here, which would be like an OB. So drop, base, drop, enter. And then we have that one where we use this as the POI. So sorry, this should be down here. I'm just trying to make this all line up so you guys can see how the trend lines play. Okay, do you guys see how like that whole thing is very structured? So here, this is an entry one based off your base. Price moves away, there's no basing candle in here, right? There's no basing candle in here. So price moves in it and then moves out of it. So this is our POI. Okay, so you can see third tap entry. Basing candle is just a drop, base, drop. That's it. Or rally, base, rally. That's all a base is. This is a base, drop, singular candle, drop. So red, green, red. And this would be where your supply is. And then you would be waiting, price to enter and drop. Any questions? Anybody? Okay, going back to that example over here, what I did for the last class is I actually wrote it all down for you. Right here. Okay, so the confluence is here. And the only reason I'm using this trade is because this is like the biggest trade of probably last year. Is we have premium, we have timing, we have structure, we have QM, and what else do we have? We have the POI in alignment. QM, we have deviation. It's just so many confluences that it's just such a high probability. Yeah. Okay, so you have that. There might have been a deviation here as well. Damn it, I forgot to save it again. Let me just click this one. Yeah, not really. I mean, kind of. But yeah, this was probably a hard entry because you didn't really have that confirmation that you need. If this would have came down here, this would have been a sweet entry as well. So you would have been able to stack positions in there. Okay. High, low, higher, high, lower, low. You have this shoulder. And then, yeah, this would have just been too hard. High, low, higher, high. Price broke it from here. So maybe from here, if you got a really sharp buy, but even then you miss it. So this one was just very tricky to play. Okay, and if we look at H4, like you could have, where the hell is it? Oh. Like this right here, like you're feeling this imbalance, right? This isn't a setup though, you know what I mean? Your setup is looking for this pattern and then looking for the engulfment and then looking for what price does at a specific time with all your other confluences inside this zone. Okay, so inside the zone, we already know what happened here. Okay, this looks more like before we broke this resistance over here, or support, I mean. This could possibly be our base, but it just doesn't look clean to me. Like I would love to see like the actual low right here with the base, but nonetheless, price is not gonna give you like an exacting picture. So to me, this just looks like that base drop comes in, drops, right? If you guys know what I mean. So drop, base, drop, and this is our drop. Okay, this is what I'm talking about as a drop base. This is our base, drop, price comes into that with a QM and then drops. Okay. Yeah. Any other questions, guys? All right. The New York session videos have been sent. That one's like an hour and almost 2 hours long. There's some pretty good questions that session, so definitely watch it to go over all this stuff again. I'll send this recording out whenever it's done doing its thing. That way you guys can take a look at it. But if there's any questions.
Tomorrow we can do forward testing, like few of you mentioned, so you can see the entire thinking behind the entry and everything.
Yeah.
How we start the markup and everything. So we'll do that tomorrow.
No, not live trading. I don't live trade.
No, live trading on H1. You just it would take us.
Yeah, but if you must know, I'm in this trade live.
Unless you want to stay on the Zoom for 5 hours, but or want to trade live on cage one.
Like, I'll just post this in the group so you guys can see. Can anybody identify what's going on in this chart?
No worries, no worries.
Okay, here. If you guys look in the group, I just posted this trade that I'm in. I'm trading as we're talking too, so it's very, you know what I mean? It's like I have trades going on. This was based off, I believe, 30-minute chart. So we had this strong resistance, breaks, right? And then rallies through. Here's our base, tapped. So I took a buy here, and then I also took a sell here. So I'm hedging. Why sell here? High, low, higher, high, lower, low. There's a sell in here. It came up, and now we're in profit on that sell, and we're in profit on these buys. So you guys can look at it in the group. The indicator.
How can we find? It would be nice to go to the trading plan set step by step. Yeah, we'll go by. We'll show you the trading plan step by step tomorrow and forward testing and all that. How can we find the indicator you showed? You can't find the indicator. I'm the only one who can see it. It's on private, but I'll give you access codes to it. Yeah, I'll give you access codes to it. Which tickers do you use for volume profile and POCs on indices? Somebody's asking you.
Oh. So for volume profile, yeah, I forgot about that. Let's go through that real quick. So basically with volume profile, with volume and volume profile, I'm just looking at, like, let's look at, what was the example that I used last night? CAD CHF. So with CAD CHF, like, when I'm looking at my sessions with the volume, okay, so we have the moving average, right? And moving average, I use at 20 MA to tell me what is high volume, what is low volume. Anything below the MA, to me, is just low volume. But I'm also referencing previous volume, okay? So I'm looking at this strong bullish move, right? But look at like how thin the volume is, okay? This should be like really aggressive volume. This should be like matching over here, or at least over here, you know, to overtake this sell volume. This is all selling, right? But look at the buying compared to the selling, okay? This should be a lot more aggressive. So this is confirming my suspicions, right? I'm looking at the candles and I'm looking at the volume and saying, oh, look, we have a divergence in volume. We have this volume going lower while price is going higher. So that's confirmation one, right? I'm like, and when you're looking at volume, I'm looking at each bar as well. Like I'm looking at the validation in it, okay? Right here, this is a pretty big bullish candle, huge spread candle with low volume, okay? I get a pullback here, and then I'm just going bar by bar until I get to my POI to get a picture of, okay, this is not really true buying, okay? And then you get that sell-off, and you see the volume increasing, matching. It's increasing. Or sorry, the volume, the sell volume here is increasing, you see, compared to this side. And then it slowly starts dissipating as we get into the close. So that's expected that volume is going to taper off towards the end. And then what I'm also looking at is, and this is something I used with Wyckoff. I don't use this all the time. It's just when I'm looking for an area of accumulation. So when I used to use Wyckoff, right, you know how you have your schematic, right? Right, like your selling climax, automatic rally, ST, STB, and then this would obviously be like a type 2. I think. I don't remember. I haven't used Wyckoff in so long. Where your STB is your spring, and then you get your retest, inducement, right? And then price moves higher. I would be using this schematic with a volume profile. So if we look at volume profile real quick, there's my 1 hour chart. Oh, I gotta reset up my charts. Anyways, 45-minute. I'm trying to find our week. Let's go for, there it is. Okay, so I always use POC. So this is, let's look over here. So this previous week, I used the previous week's low to the previous week's high, which is over here, but I'm just gonna do it from this area, or sorry, this area. But I want that whole week. See, is this whole week, previous low? Yeah, right here. So this whole week, starting from here, right? This is the previous week. I want to see where volume's being accumulated. Okay, in this instance, volume was accumulated down here, not up here. So this is just nothing for me. I'm looking at this POC as well as a POI confluence. So POC is just where most of the volume is transacted. When you have it untapped, which here it's already been traded to. When you have it untapped, it's called a naked POC. Okay, and volume profile is telling you volume at price. This volume right here is telling you volume at time. So this is telling you what price most of the volume has been done at, and this is going to tell you what time most of the volume has been done at. Okay, but this isn't really a great example here. But what I'm looking for is if we're trading below this in a B shape, so we have like a lowercase b, then I know that they're accumulating orders down here to distribute them higher. If we have a P shape, I know that we're heavy on the top and they're accumulating orders at the top, and we should be looking for sells. Okay, let me use a 4 hour chart, make it easier. Okay, so if we look at the previous week's action for this week, for that week, which our high comes in, oh, this is that week, or high comes in here for this week to our low. Okay, so most of the volume was transacted up here, and then we can see how price moves back up towards the volume POC. Now, this isn't going to be the exact, like your exact entry, right? This isn't an entry tool. Okay, this is just telling us where price is most likely going to come back and grab orders, because this is where most of the transactions. Do you only consider higher low in the entire week? The entire higher low of the week. So I'm looking at the entire week plus the higher low. So I'm drawing it from the entire week. So like, for example, even if we did it this way, we still have that. Okay, it's the same thing. It's just the higher low of the week. We have all the orders being accumulated here. POC is right there. Okay, so this is just telling me we're accumulating up here. So when I was doing Wyckoff before, is I'm looking, okay, cool, for this week, we have accumulation, right? Accumulation. So on the next week, what am I looking for? Is I'm looking for that retest of the schematic. So let's pretend that this is our selling climax, automatic rally, ST, UA, right? UA, and then let's just pretend that this is an up thrust, even though I should probably just redraw this. Selling climax, or selling climax, automatic rally, ST, UA, UT, and then price breaks down, giving us basically a head and shoulders, right? It's all the same shit. I'm looking at this week now for that retest up here to continue down, right? Because we're accumulating orders at the high above our POC. So I know there's accumulation above, and then whatever our test area is, our POI for our test, like let's say it's here, okay. And then we have it above our volume profile or at the POC, the naked POC, because we can see up until this point, the PLC was never tested. And then we get it tested right here. Okay, so that's how I would use Wyckoff with volume in PLC, but I honestly don't really use this that much. They're just tools, okay? You don't want to overcomplicate anything. Like all you really need is strong highs, strong lows, a setup that you're looking for at a specific time. Okay, so if you're looking for a QM at a strong high or a strong low, and it happens at the exact timing, and it's completing the left shoulder, or whatever the setup you want to look for is, that's what you should stick to until you master that. There's no point in like, let me use every single tool, every little thing, you know what I mean, in here. That's like using a screwdriver and an automatic screwdriver at the same time just because you have both tools, like a drill. You know what I mean? They both get the job done the same way. And US 30, 100, 500, you draw a volume profile on Awanda charts or the official charts. I actually don't use this for US 30. US 30 I trade completely different. I scalp US 30. I don't really hold trades on that. This GJJ? Yeah. It was just we had this basing area. I believe it was on 15-minute or something. Which there was like a line chart. I use a line chart a lot. So I was just looking for a base on this. So we broke through, created a base, and then tagged into it. I think it was on a 5-minute actually. Or maybe it was 15. Yeah, so this is that like same type of setup. Is we had our move up, drop, base, drop, and then price came back up, and here's that base with our resistance here. So it's just that continuation too. Price drops into it, taps it, and then runs. Okay. I think it was here actually, 30-minute chart. See how you can see the base? So here's our strong resistance. Price moves in. This is a rally, base, base, and then drop. Price comes through it, and then I just tagged it on the base. And then here I had a sell in here, which was a hedge, stop loss above. So this one might tick me out, but I'm in profit from this one, so it doesn't matter. Make sense? Because we have high, low, higher high, lower low. So I was looking for a sell hedge here, which is fine. If it takes me out, I'm fine because I'm in profit from this one. Cool. Now we could also look at this as strong resistance. You have a rally, base rally. You could also maybe look for an entry here. All right, guys, any last questions? What M30? That would be this one.
Which one?
I mean, yeah, possibly it could sell from there. It could.
I would rather consider something inside of this area.
Yeah.
This wick is liquidity that hasn't been taken out, so something inside of this area would be good. this is actually a quite good entry. Better than taking this or this. I mean, better. Kind of precise.
Yeah.
Precise.
I feel like this one already happened.
Yeah.
Plus there's so much imbalance in QMs up here that need to be done. So yeah. If anything, I have a sell here and a buy here, so I'm safe on this trade.
Just train your eyes to see it. Train your eyes to see it. Sometimes the wicks will show you something that you don't see on this time frame, so you need to go lower. But this is a high and this is a low, and there is a liquidity in this area that needs to be filled.
I'm always hedging, always.
Always.
I'm always hedging, but you don't start hedging now. You know, you can get your account blown if you don't know how to do it properly. Like hedging isn't like I see some people hedging and they get screwed because they buy and sell at the same time because they don't know their direction at all. Right?
Yeah.
I'm just playing a continuation to a QM, so I'm QM to QM basically. You know.
And I know that stop loss, I don't know how many of you asked about stop loss, but once we enter here 10,000 times and price decides to go below this line, you can just close it. But if price goes higher above this line here, you can just keep stacking and compounding your account.
Yeah.
Just so you know, when it comes to entry approaches, if it goes below this line here, where's the end? If it goes below this line, just cut it. But if it decides to go above, especially with impulse like this, you can just keep stacking. It doesn't matter if it's here, or it's here. Even here, if you entered on buy, don't be afraid, because this already rejected it here. Okay. You can use your stop loss if you want here, a bit above to have a bit below to have some breathing areas, but just keep stacking, especially if you see engulfing candle like this, showing a strong rejection of price here. And with the indicator, you would probably see divergence here. You can already see it just without the indicator. And if we see a squeeze or tapping into demand level here, that's another good indication that you can just keep compounding. So it's not anymore blindly taking the trade. You have an indicator that's showing you the exact purpose of the price action.
Yep.
That's why I personally consider it a very powerful tool.
All right.
You got any more questions? No?
I'm gonna wrap this up before my session for 6:30 for the indexes.
All right.
All right. Have a good one.
See you guys tomorrow.
Thanks, guys.
See you.